Money is quite literally flowing into the muni bond market, according to our next guest, who says there's an outstanding $300 billion in revenue in water and sewer bonds across the country. And as more infrastructure becomes necessary, those bonds are quickly becoming perhaps one of the best muni plays out there. Who else brings you this kind of content? Dan Close is head of munis at Nuveen. So just kind of walk it back for us. Again, knowing munis had kind of a choppy start to the year, people might be going, okay, what's going on with this asset class and why this part in particular is it jumping out?
Yeah, and thanks again for having me on the show, Kelly, of course. Always great to talk about muni bonds. But I think choppy start is charitable. It was the worst performing fixed income asset class for the first half of the year, underperforming everything else. And it's really created a great opportunity. And for water and sewer bonds in particular, it's a center of the fairway, very low default, inelastic demand curve. But all munis is very local. And right here in New York, you could take a look at New York City Water, for instance. It's on sale, serving 9.5 million people, AA credit. If you are in the highest tax bracket and you're a user of New York City Water, it's got a 10.5% equivalent yield, which is just an equity-like type return.
Do they literally ask if you're a user of New York City Water?
You don't have to check a box. Okay. You just have to.
10.5%?
Right.
Why would it be? I mean, so whatever that is, 7%, whatever the coupon is, but tax equivalent. Why is it so high right now? Because people just fled the asset class?
Right. There's been a lot of issuance. The meaningful underperformance of the asset class has created this opportunity set. So something that has a very, very low default rate, that historically has been this inelastic demand curve type asset class. New York City Water longer end is yielding 4 3/4. Taxable equivalent, it's 10.5. And even if you're in a lower,
so 4 3/4 becomes 10.5%.
Right, because you consider the 37% federal, 3.8% Medicare, 10.9% for the state, and 3.8% for the city.
That's even higher than I thought.
Yes.
So is it possible that some of these deals, quote unquote, are happening in the water and sewer space, or water especially, because of the MAHA movement, because of some of the investments that these municipalities might have to make into cleaning that? We have a big PFAS problem in my town, for instance.
Right. We haven't seen much movement in New York City paper, the GO, or anything because of the recent elections. I mean, there's so many safeguards in place, so we just haven't seen too much movement, even in GO spreads. But what we have seen is a lot more issuance for water safety. Lead pipe remediation, that's 30 to 40 billion that we're going to see as far as issuance, water main breaks in the Midwest and the Northeast. But PFAS remediation, we anticipate that fully 15% of utilities are going to have to remediate this. And that's going to be anywhere from $50 to $100 billion. The EPA estimates in the next 20 years, 1.2 trillion of issuance in order to go in and to address aging infrastructure.
I believe it. So,
and PFAS is a large and growing part of why that needs to have so much issuance.
Hugely complex and expensive to deal with, as we've all been learning. So across the country, you mentioned New York, but I'm sure there's a lot of places where they can look at these bonds and yields and see some opportunity. Anything you'd add about, one region or one kind of municipality versus another, or what are these bonds backed by as well in terms of the safety of that revenue stream?
Sure. On the safety issue, we see it primarily in the Midwest and the Northeast, just replacing aging infrastructure. In the West, it's more about securing water. So San Diego came out and issued about $1 billion in debt for water desalination. So we're starting to see that. We're starting to see issues just the last couple of weeks. The Southern Nevada Water District issued money for residents to take out turf and to go in and to get more efficient water meters. So between both the safety and also with respect to the scarcity, we're going to see a lot of issuance here over the next 20 years.
They want people to take out turf in Santa?
Turf, that's exactly it. Take out your grass in order so you're not watering your lawn
landscape,
and to make sure that you're going in and
I think we're going to need that in New Jersey soon. I'm thinking about a rock option as well. Dan, always appreciate you coming in and breaking this down for us. Dan Close of Nuveen.